What's up guys, and welcome back to another weekly studly stocks report with your host, Talos. Of course, today's video is going to be a little bit of a shorter video, quite a bit of highs that we want to talk about, a new IPO that I want to discuss, a very exciting new IPO that I want to discuss, but there's not a lot of lows that I want to discuss in today's video. Without further ado, these are pretty much what we're going to be talking about this week. Obviously, these are the topics. A lot of it looks like it's green, but there's only about 2 of them that are in the lows for the week. But of course, we'll discuss it. But today's video, we're talking about Workhorse. We're going to be talking about Moderna, Pfizer, and of course, Johnson & Johnson. If you guys know what those 3 are, those kind of relate together. We're going to talk a little bit about Tesla and the new IPO, Coinbase, a little bit about Plug Power, and then finishing off with Neo, but it's more in relation with Tesla, I think. So kind of link those 2 together somehow for the lows for the week. But without further ado, let's get into today's topics. Now, the first one, of course, is Talos Energy, but we talked about that normally. Basically, just following up with them, but for the most part, they're pretty much the same as last week, so we won't harp into it too much. But the one thing that I've been following for a very long time, especially for those who follow electric vehicles, EVs, Workhorse is a interesting beast nonetheless. For those that may not know, Workhorse Group is engaged in designing, developing, manufacturing, and selling medium-duty trucks. So yes, they are a workhorse indeed. So we'll go into some pictures probably of what stuff they do, for those that may not know, but they are doing quite great. One of the highs of the week. Now, let's flip over to the charts. You can see exactly what we're talking about here. Now this is the 5-day history of it. They were kind of starting a little bit slow. They kind of spiked a little bit on Tuesday and dipped dramatically from Wednesday and Thursday, as low as like $11.24, and then early today they just spiked up crazy, all the way as high as $13. So we're gonna find out exactly what's happening there. But for the most part, it's probably from the earnings report. But we'll definitely do some research on that. But I love Workhorse. Before we get into some of the data here, let's look at some pictures that I want to show of Workhorse. These are pretty much the vehicles they have. It's mostly commercial, but the reason why I have so much belief in it, not only is it an EV company, but also because it's commercial use as well. So not so much the consumer side. Now, for those that follow anything when it comes to EV vehicles, like this particular looks fantastic. Like it has that kind of modern look that I love about it, but it's also used commercially, so great stuff there. Obviously, they could be used for various companies like FedEx. You can see the partner up with either FedEx or possibly Amazon maybe. So I'm not sure if you've ever seen these cars around, but definitely if you guys see this, they're definitely working on great strides in the EV community. So in this articles today, shares of the Workhorse Group traded up to more than 10% on Friday following an endorsement from a Wall Street analyst. That's always going to be a key factor when it comes to like spiking this up, because obviously when something is backed up by like either like a high respected analysis. So we'll kind of dive into this Wall Street analyst and see what he has to say. So it says here, Workhorse focuses on electric trucks and delivery vehicles, and investors coming into 2021 had high hopes that the company would win at least part of the massive $6 billion contract to modernize the U.S. Postal Service. That would be huge, yes. I could definitely see this being a huge asset to the Postal Service. Because when you think about like Amazon or FedEx, they have their own vehicles. They typically want to stay in-house for a lot of their vehicles, so they probably don't want to partner up with a separate company unless they buy it out from them, but I don't foresee that happening anytime too soon. Bad news with that, unfortunately, in February 23rd, the Post Office picked a different company for the contract, taking the win out of the Workhorse sales. So that is unfortunate. So that's probably why it went down. So we'll probably look at the history a little bit later, or why it went down earlier in the month, because that would be a huge blow. So this is the announcement right here. The B. Riley analyst, Christopher Souther. So it basically says that not all the hope is lost, and today's initiative coverage on Workhorse with a buy of $20 per share price target, currently sitting at $13. So that's a pretty modest price growth there. Pretty realistic for the most part. So in hindsight, still relatively cheap for an EV company. commercial EV company. He argues that most of the company's delivery vehicles will beat most of the competition to the market. Far too large of a cargo area makes it an attractive option for a lot of potential customers. And I agree. I definitely agree. So even without the government order, Workhorse has a backlog of more than 8,000 vehicles worth about $600 million for future revenue. So that's huge. But reading this article briefly, the analyst pretty much, he's kind of basing this off more on potential rather than actual, this is what's happening right now. And that's what a lot of these predictions are going for, is like just the belief in it. And obviously that kind of goes back to me as well, because I truly believe that they are definitely be a name in the commercial EV, especially if they get a contract similar to what they could have had with the postal service. So it kind of goes back to that potential, what they see in the company in future growth. And honestly, the chart is not that bad. So let's look at the let's do a few month history. So this is back in, So yes, February, it was super high because of that potential news with the post office. And once it dropped, it really dropped. It was high as $41, going all the way as low as $14, and it's kind of still dipping down. But yes, oh yes, that's a big drop, and I can see why. Because that postal service, that $6 billion contract would have been huge, but unfortunately they did not get it. But let's look at a more max history. So yeah, the max history, obviously it's not the lowest it's been, so it's definitely still has potential, as the analyst says, but just not that high of a potential. Whew. We just have to wait and see and kind of progress forward. But enough about that, let's move into something else. Now, before we move on to the big topic, obviously we're going to be talking about Moderna, Pfizer, Johnson & Johnson, and of course Coinbase later in this video. But before we continue, of course, we have to pay little bills by checking out today's sponsor for today's video, Public. Now, Public is a stock buying app. Think of it as a social investment app where you can interact with other people also interested in your specific niche. You can do recommendations, you can kind of follow their portfolio. I like using it because it's super easy, super friendly. Obviously the community is amazing there, and of course if you use our affiliate link down below, you get up to $50 worth of any stocks, and those stocks could potentially be either a Tesla or any of the stocks we mentioned in today's video. Definitely check out the links down below, helps support the show, and of course you get a little slice of stocks up to $50. So let's go ahead and progress to the next stocks to talk about. Those, of course, is the top 3 in terms of the vaccinations. Now, the top 3 companies for distributing the vaccines across the US right now is, of course, Moderna, Pfizer, and Johnson & Johnson. And they are the big 3. And of course, most of them, at least the first 2 anyway, have a massive gain, a top gainer for this week. So let's look at it. Let's look at Moderna first. Now Moderna, oh my god, look at the 3-month history of Moderna. This is actually the max history actually. So this was back in November, December timeframe. 2020 is when it really picked up, and then really picked up like right around December 2020 when the vaccination started going out, I think. If it's staying steadily around there, that's kind of keyed down a little bit to the 5-year history, because that's what it's all about here. Check this out. Obviously $138 all the way as high to $171. Oh my god, there's a huge potential growth in the 1 week alone. And obviously we probably already know what happened during the week, but we'll kind of dive into some more articles in a little bit. For those that may not know what Moderna is, they are a clinically staged biotechnology company pioneering messaging RNA as well as vaccines for patients. The clinical stage of the MRNA 1647. I don't know what that means because I'm not a doctor, but very important stuff. Very important stuff. Now, if you look at the chart here, it's mostly in the buy rate, some at the hold rate, 1 at sell, 1 at a strong sale. Before we look at some more news, let's look at Pfizer real quick. This is the one week history, kind of the same deal. Been going up, starting around $38 all the way as high as so $36 roughly to $30. So not as high of a growth as Moderna, but still a very massive growth there. And then Johnson & Johnson. Now this one's a little bit more trickier because they're not really known for vaccines, for example, but they do engage in quite a few things. But they're kind of all over the place. Low as $157 and as high as $162, but of course up and down throughout the week. I go back to Pfizer. They are a research-based global pharmaceutical company that discovers, develops, and manufactures and markets medicines for humans and animals. They're one of the cheaper options in terms of the 3 big companies, the big 3. Johnson & Johnson, they engage in research and development, manufacturing, and sales of a range of products in the healthcare field. They operate in 3 different segments: the consumer pharmaceuticals, and medical devices and diagnostics. So even though me personally, I don't think of Johnson & Johnson in that field, I basically know them as lotions and more in that kind of realm, I guess you can say. But they also dabble in research as well for the healthcare field. But yeah, let's go ahead and look at some articles real quick. Now, before we dabble into this conversation real quick, I want to preface, obviously, I am not an expert in this field. If there's anything that I made incorrect or that you guys want to point out in the comments down below, let me know in the comments down below, because obviously I'm not a doctor and I'm also not a financial advisor as well, so I can't tell you what to do with your money. But obviously we're just kind of reading what the article says here, and we can kind of like, I guess, make a rough guess of like why it's going up, and it makes sense why it's going up only because of these vaccines that are coming out. Now, according to this article, the Pfizer sees a need for a third vaccine dose as Moderna updates its timeline on the third booster shot. What I do know about these shots, or at least what is read or talked about in the news, is the 2 shots that you did get, or if you haven't already taken it, there's about 2 shots apart from Johnson & Johnson, which I was told is only like 1 shot, but it only covers about 75% immunity or potential immunity with it. Whereas the other 2 has like almost a 99% chance, but of course that's just what they say. So I'm not, like I say, I'm not an expert on that field. You can always let me know. But typically you require 2 shots. And I took it back in January, and I took the Pfizer shots. I experienced some mild, I guess, reactions to it. A lot of soreness, a lot of fatigue, some headaches, body aches and stuff like that. But for the most part, it was only for about a day, 24 hours roughly after the shots that I took. Obviously, those were my experiences. There are some people that experience a lot worse than that, and there's even other people that have like no reaction whatsoever with it. So it kind of just depends on your body and how you react to certain vaccines. But now they're talking about a potential booster vaccine, a 3rd shot. In hindsight, this could be an annual thing depending on how long the pandemic is going to last, and if there's going to be a recurring thing similar to like a cold or a flu shot, where that's also an annual thing as well. Now when it comes to this right here, obviously from what we were told, that there's a potential that these vaccines that we are taking potentially won't even really be effective throughout the entire year, maybe up to 6 months from what we were told. And that's why there's a idea of potentially a 3rd potential booster shot in the works. Another thing, of course, in the news, of course, Johnson & Johnson's vaccine has remained paused, and that's probably why we don't see a significant growth in the stock market for it. A lot of adverse reactions to it, and a death happened with it, unfortunately. And according to this article, Johnson & Johnson's vaccine pause will remain in effect for another week, up to 10 days. And the reason for that is basically the delay on the vote for recommendations to the CDC. This article right here is Moderna stocks rise at the new COVID vaccine tackles South Africa's variant. This was late Tuesday. It updated. The vaccine generated antibodies against the mutation first discovered in South Africa, and is reflected in the after-hours trading. The one specifically targeting the variant first discovered in South Africa, and the other combines Moderna's authorized vaccines with the updated shots. Both increase the level of antibodies against the viral mutation in mice. The combination approaches led to a border level of immunity. Using the variant-specific vaccine as a 6-month booster shot also increases antibodies levels. So that's what we talked about earlier. And of course, with that, the stock surged 7.4%, $249 back in the market back in Tuesday. See, right now it's $170 right now. Obviously, as a consumer, this is super important, obviously, to express out. But as an investor, this is kind of like what I can kind of take from this. Unfortunately, the way this kind of works in terms of the stock market, the worse the condition is and the more discoveries found, the higher the growth of this stock. As more discoveries are made with the vaccine, the more it propels that stock upwards. As a short-term investment, great, but for long-term, we just don't know. But they're saying that this could last. We hope not. It could last until 2023. 2024 maybe. So it kind of goes back to you guys how you feel about it, whether you believe that the stock will continue to go up as more variants are discovered and more discoveries are made to improve against that variant. Obviously go ahead and buy in. Kind of all comes down to like who discovers it first. If it's Pfizer who discovers it first, Moderna discovers it first, or even Johnson & Johnson discovering it first. Like I mentioned before, I'm not an expert on this, and there's probably a lot of things I'm kind of skimming over and kind of summarizing as much as I know. But obviously, comments down below. We can discuss it further and you know, make it to a little discussion piece. But I'm curious to see what you guys think about this. Which ones you believe in more as an investor as well as a consumer standpoint. So definitely be safe out there in the world. Now let's go ahead and talk about our next topic. Tesla. Oh yes, Tesla. This is the 5-day history on Tesla. as you can see, they were pretty much in the $680 mark. If you guys followed my video, I think about 3 weeks ago, maybe about four weeks ago, maybe, we talked about the stock. They were super low. They were like sitting at like 680. They're at 620 actually. That was probably the perfect time to buy, because like obviously if you had the money, great, go invest, but they were super expensive, not gonna lie. This is why I also recommended NEO, but of course NEO is one of our lows for the week. But we can kind of discuss that in a little bit and see how that's affected, because usually it's a one-to-one. If Tesla goes up, NEO typically goes up as well, but this is one of the first times that I've noticed in the week where it's actually inverse. But we'll go into that a little bit. This is the 5-day history of Tesla. NEO, however, it's almost inverse. It was pretty much almost matching up to here, and then right around Wednesday is when it starts to deviate. That's when that's why it went down here on Thursday, and it kind of went up a little bit here today on Friday. But Tesla is doing fantastically. Sitting earlier in the week, they were right around 685, as high as 776. But kind of dipped down a little bit to 730 as the week went on. Let's look at some news regarding this. Now, this was the news back 3 days ago, roughly. The stock-engine vehicle pioneer Tesla closed of $70 Monday for the first time in about a month. Stocks are on the move again Tuesday as investors look ahead to the first quarter earnings due out later in April. Now, that makes sense. Okay, that makes sense why it's inversely, I guess, different, because they're going to be releasing their first quarter earnings, and a lot of people believe that they broke the threshold that they need. Stocks are up more than 5% on midday trading Tuesday at almost 740 a share. We saw that in the charts. Now, of course, that wasn't the highest it's been this year. If you guys remember, back in January, they were $900. Has since fallen tremendously since then. Now, according to this analyst, Dan Levy, he sees another beat coming when the first quarter numbers are reported. Now, obviously, that's just a guess. They can always not beat that earnings report. And if it does go low again, I can definitely see it hitting another 620, 650 range if it doesn't beat another quarterly. Now, if you see in the earnings report that he actually made 2 times more than what they guessed, that usually means that the stock will go up tremendously. But let's say they only made $800 instead of that $1,000 mentioned. Like, instead of, it kind of depends really. Either it'll go down, the stock value, or the CEO, for example, says, oh, we're going to do this and this, and they believe in what the future holds for that quarter, then it could either stay stagnant or actually go up, even though they didn't beat those earnings that they initially guessed at. Going back to Tesla example, if they do beat the earnings report coming up, then obviously it's going to go up even higher than what we see right now. And that's why a lot of people are buying into it. You typically see a huge growth on a few things, either A, before the earnings report, or after the earnings report. But of course, that's all we're gonna say about that. Let's move on to the next topic. Now this one, obviously the next one is gonna be Coinbase, the new IPO for the week. But we're gonna save that for a little bit later in this video, so definitely stick around for that. Let's talk about the 2 lows that I found of the week. Plug and NEO. So we kind of go ahead and talk a little bit about NEO real quick. They were pretty much as high as, was that $39, but quickly went back down to the $35 mark, which is not a huge downfall, but it still shows that they're not going as high as Tesla. Their highest point was around a $50 range, and we haven't seen that in a very, very long time. So I'm hoping they kind of pick it back up, but let's go do some research right now to see exactly why it's still kind of stagnant right now this week. Alright, so this is a quick article at the moment. NEO stocks is bound for a strong comeback after finally finding its groove. This was released back in the 14th of April, so about 2 days ago. Now, of course, during the start of 2019, there was a lot of quality control issues, including battery fires, product recalls, reduced buyer subsidies, and basically everything you can name according to this article. And of course, with that, it dropped 85% from its earlier high that following year. 2020 was a big turnaround year for the company, as we all seen, with a gain of 1,000%. Huge. Now, the big positive of why this article says that they are going to have a massive growth, we're just kind of waiting for that to happen, is this number right here, $100,000 cars. There's even a tweet made by Elon Musk congratulating that is a tough milestone to get. And with that, of course, it helps spike the company even higher. Obviously, Tesla is a competitor to NEO. So obviously, when a competitor like that acknowledges a tough milestone, that is a huge plus. And it looks like they announced their first sedan as well. That's huge. And I believe that was the picture. Ooh, and it looks so sexy. Oh yes. Wow. That is an amazing looking vehicle. Now for those that may not have seen NIO, these are some of the cars they have. The EC6, which is their mid-size SUV. We have the full-size SUV. Now this is their more like, I guess, sporty SUV. And it looks very, very aggressive. This is the interior of the vehicle. They look really good. They really do. And similar to Tesla, they even have like their own like rechargeable stations and stuff like that for the house as well as for commercial use. So definitely a great collection of cars there. One of their big things that they got is the battery as a service, which is what we saw earlier with their NIO Power. That's NIO owners swap out a depleted battery for a fresh one instead of having to find a charger and then waiting, which could potentially take several hours. So that's kind of interesting. That's very interesting. So I don't know if Tesla does that where they can actually swap out a battery like that on the fly. So that's kind of a nice little difference that we can save with Tesla. So look in the long term, this is the electric car company that have proven products, proven demand, and it has all the pieces in place for rapid growth. And this is why it's going to propel NIO back to a long-term growth trajectory, as according to this article. And for one, I believe it. I definitely believe it. Right now, I believe it's only in China, I think. I don't know if they actually have a... I don't know if you can actually buy this in the US, I don't think. But if you just look at this 1 year history right now, obviously sitting as low as $2, sitting at like as high as $64, $65. So there's a lot of huge potential. And obviously right now it's just kind of a little bit of a slump this year. But kind of like what I was talking about before, this is a nice cheap alternative to Tesla. Huge potential in the long run. So consider it if you guys are interested in getting an electric vehicle. And of course, if Tesla is just way too expensive. But if you do want to get into a little of Tesla, definitely check out our free link down below, public, for your own slice of Tesla up to $50. Enough of that, let's go into our next low for the week. And that of course is Plug Power. Now I've invested in a while, so I'm kind of glad I sold it when I did because it's definitely down right now. Check it out. I sold it around this range right here, around the $55 range, and it went up a little bit more after that to up to as high as $72. And I thought, man, crap, I lost a good one. But then it started really going down right around February 2021, and it just keeps going down and down. What the hell is happening with... Obviously, for those that may not know what Plug is, they are a leading provider of alternative energy technology focusing on design, development, commercialization, and manufacture and hydrogen fueled cell systems used primarily for materials handling and stationary power markets. Now, what the hell happened around February? I haven't been following them. Obviously, when I don't own a stock, I typically don't follow them as heavily. I'm just curious. Let's do some research right now, and let's find out, guys. All right, there's an article by the Monthly Fool. They fell as 13.6% on Thursday, February 25th, after the company's fourth quarter results missed that Wall Street expectation. Now, that's what we talked about before earlier with Tesla and the earnings report. Sometimes you'll get like a massive a gain after your earnings report. Sometimes you actually get a massive drop, in this case, when the earnings for that report are in the negative or miss that target. It says here they report a negative revenue for the quarter. That's huge. It says here Plug Power reported a revenue of negative $316 million for the fourth quarter and negative $100 million for the year. Wow. Now, of course, these stats, I believe they're talking about the previous year. So the previous year was about $337 million for the full year. But I guess last year, 2020, was a negative 100 million. So that means they lost 400 million. That's a huge loss. So it looks like Amazon bought about 55.3 million of Plug Power's common shares at about $1.20 per share, which is probably what we saw earlier in the graph. Now, according to this, slower than expected adoption of the hydrogen fuel cells. Now that's the big one. Obviously, for those that may not know, there's multiple alternate energies sources, but the two big ones in terms of vehicles is hydrogen fuel cells and, of course, electric. There's not big adoption in using hydrogen fuel cells versus like electric. Obviously, we talked about it before with Tesla and with NIO. They're both electric vehicles. Unfortunately, there's a lot of companies that don't use hydrogen fuel cells. So this is the big one right here. Their market cap is about $23 billion, but the company hasn't generated any profits ever. Wow. Yes. And with that, of course, a lot of people will consider it overvalued. If you're not generating profits, why invest in your company? We're just burning money in that sense. So that's why that massive drop there as well. Especially with the negative earnings that was reported back in February, people just gave up faith in the company. The reason why I sold was for personal reasons. I didn't really consider it more in the sense of like not being profitable. I did see potential with it, but reading from this, now I lost complete faith in the company as well. We just have to kind of wait and see. If you have some play money, you can probably invest into it. I definitely don't recommend this as part of my Talos picks of the week. But regardless, guys, let's move on to the next big topic. Of course, this was the major news of the week, the latest and greatest, I think, potentially greatest IPO ever to be announced is, of course, Coinbase, an exchange for cryptocurrencies in the market. What's crazy about, even before it IPO'd, they were thinking about the valuation of the company to be $100 billion. $100 billion. When you compare the other exchanges like NASDAQ and the New York Stock Exchange, I think combined they're about 66 billion, and they're going to be evaluated even higher than that. Currently, if you look at the market cap of Coinbase, it's sitting at around 66 billion, so it matches right now currently to both the two biggest exchanges in the US market. If you look at the chart right now, it's about 6% growth today alone. Now, it's not as high as it's been. The IPO price is about $250 per share. $250 per share, which is huge. Very, very expensive. Definitely not cheap whatsoever. As soon as it hit the market around midday, I think it was Thursday. Might have been Wednesday or Thursday. I can't remember exactly. But once it hit that midday, it went all the way up to $381 and spiked as high as, I want to say, $450. I want to say, we'll look at the chart a little bit in a moment. But that is a huge, huge growth. So let's go ahead and flip to the charts. This is pretty much where it is. Like I was with you before, it kind of IPO'd around 250 and it's opening day. It's not showing it here, but it did hit as high as 400 and quickly it went down. It kind of ended the day around 320 on that first trading day. And recently, as you can see here, it's been going kind of stagnant for the most part, but definitely up and down. It's kind of stabilizing a little bit as it moves on to the rest of the week, but definitely a big positive move in terms of like the crypto market, because this is huge news. This shows a little bit of faith in the crypto market. Now, for those that may not know what Coinbase is, they are the largest US cryptocurrency exchange, trading some 50 different digital assets. I thought it was a little bit less than that, but according to this, 50 different digital assets. So not just Bitcoin, Ethereum, Litecoin. When Coinbase first came, or I knew about Coinbase back in like I think 2014, all they had was 3 coins. 3. They were definitely not trading as high as it is now. If you guys have seen the price of Bitcoin surge past $60,000 for one BTC, one Bitcoin, it's not stopping. It looks like it's trying to go towards $100,000. Crypto market is definitely not going away. It's here to stay, as multiple articles have said. Now let's go ahead and read some articles on Coinbase right now. Now this is the opening day, the market debut, raising 31.31% increase in the market. That is a huge growth. Now we mentioned that the reference price was $250 and closing at $328, but of course it reached much higher than that. Yeah, right here. So the stock price hit as high as $429 that trading day. It's huge. So it looks like the company launched in 2012, which is actually pretty new when you think about it. Especially, like I said before, I heard about them back in 2014. And when they first started out, it was only Bitcoin and Ethereum. The reason why I knew about them so much, because I remember they generate a high, super expensive transaction fees for every time you buy and sell crypto. And with the way crypto was back in the day, it was very, very volatile. One day you could be sitting at like $100 profit. The next day could be $1,000 profit. That's how huge that growth was. But that a huge transaction fee, which a lot of people really hated about Coinbase back in the day. When Bitcoin, I think 2.0 came out, the transaction fees have diminished, and now it's a lot more reasonable to buy and sell at a more day trade like value. I'm not able to read the entire article on this one, but basically Coinbase stock could hit $500. And he explains pretty much why. In a way, I kind of believe him. I definitely believe it's gonna hit $500, if not more, at maybe even $1,000 per share, because as I mentioned before, it holds 50 different coins that you could potentially buy, digital assets you can buy from Coinbase right now. Now, when you think about the where it was before to where it is now, that's a huge growth, and it can only be more. Obviously, there's a lot more than 50 coins out there in the market, if not thousands of coins, if not multiple thousands of coins available. Now, not all of them are great, of course, but not all of them are terrible either. And it just shows that Coinbase is set for a sustained rapid growth as the industry, as well as the industry ecosystem, expands and increases the adaptation provided from Coinbase. Now, a lot of people are starting to believe in this currency, and there's a lot more adoption. There's a lot of people buying into it and actually buying and selling stuff into it. I remember back in 2014, 2015 timeframe, people were buying Bugattis with Bitcoin. Now you can actually buy other stuff. You can buy a Tesla now with Bitcoin. It gets to a point where like average consumers are actually buying and selling stuff with Bitcoins. They're using it as a type of exchange in terms of assets, and that is huge when there's perceived value of like that. Now, what a lot of people are thinking about is like, obviously the evaluation of this company is really ridiculous at $100 billion according to this article, even though right now currently it's sitting at around 66 billion. But that's still a huge valuation of the company. The crypto market is still very young, and we expect many more companies to compete for the profits that Coinbase enjoys today. And that's true though. There's actually different exchanges out there that also buy and sell crypto. There's Binance, for example. There's Qcoin as an example, but they typically don't accept fiat. I think they're slowly adapting fiat money into it. For the most part, the only way to buy stuff from those two other exchanges mentioned is buying and selling crypto. There's no fiat exchange whatsoever. So a lot of people, what they typically do is they transfer the fiat money from Coinbase and then transfer the stuff from Coinbase into those other exchanges, and then maybe even transfer it back to Coinbase depending on how they feel. And Coinbase is their main hub. But according to this article, it looks like other companies are potentially trying to compete and potentially try to grab some of that market away from Coinbase. Here are the other competitors I was mentioned. I've seen them use a lot of these before. There's Gemini, there's Bitstamp, there's Kraken, there's Binance, and many others. They also offer lower or even zero trading fees as a strategy to take some of that market share. This article tries to illustrate exactly how this is justified, the $100 billion. They must maintain a 25% margin on net operating profits over taxes, above the Nasdaq's 19% and below the international exchanges at 31%. And they must grow their revenue by 50% compounded annually. If they operate on those two conditions, then they definitely, of course, expect $100 billion valuation, which means we could see the stock potentially being even higher than what we see now, which is why it's justified to see $500 per one Coinbase share. In this scenario, it says here Coinbase can earn $21.3 billion in revenue by 2027, which could be 1.5 times the international exchange and Nasdaq combined 20-term revenue. That's huge. And looking at this chart, this is the implied growth right now at $101 billion, which means by then we might see even potentially a $750 valuation per one. Now, obviously, as we mentioned before, Coinbase is really expensive, now sitting at $342 per share. Obviously, as a long-term investor, I think this is going to be huge, not only for the crypto market, but just for in general as a profitable stance for the long term, especially if they continue to update their app and have more and more different coins added to the systems and putting more emphasis and belief and more adoption to actually use Coinbase as a form of currency to be exchanged. It could be something utility type coin. It could be more of a currency base like Bitcoin. It could be an infrastructure, an actual type of algorithm that could be used, whether it be like an Ethereum base, or it can even be like a Neo base as well. Great potential, definitely a long-term buy. And even though it is expensive, I have to add this into my Talos picks for the week. Obviously, let me know in the comments down below if there's anything that I missed and you guys want to discuss in the comments. Obviously, this is a huge win, I guess, for the crypto market, especially if you've been in the game for the crypto market since almost its early adoption. I'm curious to see what you guys have to say. Let me know in the comments down below. What do you guys believe? Do you guys believe in Coinbase? Do you guys think that this is the future? When you compare with other exchanges, this is huge. Excited to see them next to NASDAQ or being its own thing where they compare the entire crypto market in its own little niche. SP 500, it could be part of the Dow Jones, you know what I'm saying? Like, it could be the measuring stick for all crypto markets. And this is just the first step in that. So definitely super excited. That's pretty much it, guys, and hope you guys enjoyed nonetheless of the highs and lows of the week. Obviously, more again in the following weeks to come. Coinbase, of course, being a big Talos pick for me. It is expensive, but I remember when Amazon was only $300. Look at Amazon now. I thought $80 was expensive before for Tesla. Now look at it right now. So I'm not saying it will ever be that high or that growth, but you just never know. Just having belief in the company, and I have a massive belief in the company. Obviously, guys, I'm not a financial advisor, so I can't tell you what to do with your money, but that is definitely my Talos pick of the week. Coinbase being a huge one. It just IPO this week, so definitely be on the lookout because it's definitely going to fluctuate massively up and down for quite a bit. I typically don't buy stuff in IPO prices, but I had to jump in, and I definitely see huge potential with this in the long term. With the way things are happening, with people staying at home with the pandemic, people are starting to buy stuff, especially in the crypto market. People getting like graphics card, mining Bitcoins, huge stuff happening in the crypto market. Hope you guys enjoyed it regardless. I definitely enjoyed talking about stocks with you guys. If there's anything that I missed, got incorrect, you guys want to talk more, in the comments, let me know. We can make a little discussion. And if you guys haven't already, definitely give us a like, supports us in the show. Join the collective community, join us here in the Stilly Boys community channel, and also check out our sponsor for today's video, Public, and grab your slice of a free slice of stock. It could be Tesla or something else, up to $50. Link down below. Help support the show, and of course, we love you regardless, and we'll definitely see you in the next video next week for some more weekly Stilly stock support with your host, Talos. But that's all I got. We'll see you next time. This is Talos signing out. Peace.